Will we see a housing market crash in 2023? I'm gonna give you my reasons as to why I absolutely do not think we'll see a housing market crash, and I'm gonna give you the truth about the current state of the market. Yo, so what's going on, everybody? My name is Alex Bearhayden. I'm a local real estate agent operating out of Orange County, specifically out of Irvine, California. However, I do service all of Southern California. So today I'm gonna give you the reasons why I don't foresee a housing market crash like we saw in 2008. So one of the things to really talk about is how we've been in the seller's market the past few years. If you are someone who sold your home over the past couple of years, you've understood how incredibly easy it has been. If you're on the buyer side, you've understood how incredibly difficult it has been trying to buy a house, specifically because of the level of competition on the buyer side. And with the buyer side having so much competition, it has made selling your house so incredibly easy. But the real question is, are prices going to come down? And when you look across the board on the macro, we are going to see, and this is just my professional opinion, I do think we're going to see prices trend downward. But that's because prices are going to level out. So basically, people want to know if housing prices are going to come down in 2023. But the thing that people have to take into consideration is real estate is more of a hyper-focused, well, real estate prices are a hyper-focused entity in itself, meaning there are places in the country who are going to see an increase in their property value, and there are other places who are going to see the property values trend downwards. Specifically, like places like in Austin, Texas, or places in Atlanta, Georgia, places where people flooded from high cost of living areas and they flooded to lower cost of living areas, and now those lower cost of living areas are more populated. Those are going to be the places that are going to see the most downward trend, because a lot of those people brought all of their California money, all of their New York money, and they went to the more flyover states, or they went to more popular states like Texas, and they were overbidding on properties. And what happens when you're overbidding on properties is eventually, when the market levels out, your overbid is going to be reflected. Now, that doesn't mean that you made a bad purchase. If this is your primary residence and you love your house, you like your payment, you like your interest rate, so don't worry about the value of your property in 2023 going into 24. Focus on the macro, right? When you just bought your property, focus on the macro and understand that in 10 years, my property is going to be worth more than when I bought it. And if you relocated and you overpaid and you overbid for your property, understand that that value will come back to you. And if this is not your final home, if this is not the home that is your dream home that you want to, eventually start your family or grow your family into, then you understand that in 10 years, the value is going to be there. In 15 years, the value is going to be there. So don't get too bogged down by if you overpaid for a property, it not holding the value. Another reason why I don't foresee us going into a market crash is simply because there's not enough inventory on the market, point blank period. The amount of inventory we're seeing today on the market is significantly lower than even in the pandemic, and especially in 2007, 2008 when the market crashed. What does that mean? That means when there is a low amount of inventory and you have an influx of buyers, then the inventory is just basic supply and demand. The inventory is then worth more. Now, what we're seeing, like I've alluded to or addressed in the beginning, is we're seeing the market level out, meaning we're seeing less buyers and less competition amongst the buyers, but we're still seeing low inventory. And the reason, or one of the reasons why we see low inventory particularly, is because builders who build new construction homes have not been building homes to keep up with the demand that buyers would typically want. And one of the reasons why is because the price of lumber, the price of goods and services that these builders need in order to acquire and build out land and build out communities, a lot of those supplies have been incredibly expensive over the past 2 to 3 years. So eventually, which actually what we're seeing right now, is the prices of these of lumber and things like that are coming down. Now we will see builders ramp up production. However, builders still have to sell the inventory that they already have. So that's something that they're going to take into consideration, which is exactly why you see places places like Toll Brothers, which is an incredible luxury home builder. You see in places like Lake Forest where they're offering $75,000 to go towards whatever you wanted to go towards. Places in Porter Ranch. The community out in Porter Ranch, California is incredible. And they have deals going on where you can get $150,000 off of your price. So that lets you know where the market is, because a year ago, literally January of 2022, no builder was giving any incentives. They weren't giving you anything for like your appliances. They weren't giving you anything towards upgrades. They weren't giving you a damn thing. But in today's market, what we're seeing now is because their inventory is starting to sit right along with the everyday person's inventory sitting on the market, just like regular everyday people who are giving money or giving seller concessions, these builders are doing the exact same thing because they have to offload their inventory, because the longer they hold on to their inventory, the more money they're paying out of pocket for the land and the loans that they have on their entire project. Something else to consider is the fact that there is significantly less buyer competition. In 2021 and in 2022, what we saw a lot of, 2020 and 2021, and then basically half of 2022, what we saw was a lot of buyers in the market, an influx of buyers, because interest rates were so incredibly low. So with the higher level of competition, that went well, especially for the sellers of these properties, because you can have your house on the market for 2 hours and you already got 5-7 offers on your property. So we're not seeing that anymore because interest rates have gone up. Now I will say, on the whole interest rate thing, like, people have become so accustomed to 4%, 5%, over the past couple years, 3%, 2.25%. I know people who have 2.25% interest rate. I know people who have 2.5% interest rate. I have clients of mine who got in at the right time. We've become so accustomed to that when we see a 7% interest rate, like around what we're seeing today, we think we're being robbed. We're thinking like, what am I supposed to do with a 7% interest rate? What am I supposed to do with an 8% interest, 6.5%? What am I supposed to do with that? When in actuality, since 1971 up until December 2022, the average interest rate actually is like 7.76%. So it's between the 7 and 8% range. Basically, over the past like 40, 50 years, the average interest rate is anywhere between 7 to 8%. So where we're at today is we're seeing the average. So when you're talking to your friends and family and you are telling them they need to wait for interest rates to come down, I need you to not say that to anybody, because we are at our historic average. And again, the main point that I always make to buyers is not about interest rate. The sole thing that you should be asking yourself when you're thinking, do I want to buy a house? Is it the right time to buy? Should I buy? There's only one question you should answer is, can I afford to buy? If your answer is yes, you can afford to buy, even at today's interest rates, you absolutely need to get into a home. Now, I've made plenty of videos in the past. I've talked extensively on why owning versus renting is significantly better. So I'm not gonna make today's video about that. However, I need you to understand, affordability should be the only question that you should be asking yourself when asking the question, is it the right time to buy? All right, I'm about to give you a few more reasons why today's real estate market is nothing like 15 years ago, when we saw the housing market crash back in 2008. So one of the things is the amount of job cuts that we saw during that time. Now, of course, we were in a recession back then. So we saw a net loss of about 8 million jobs back in 2008. In today's market, we're not seeing a net loss of jobs. And to add on top of that, the amount of jobs in totality 15 years ago was about 138 million. In comparison to today, we have 158 million jobs. So what does that mean? That means more people are employed today than they were 15 years ago. One of the biggest factors that I also want people to really to consider when talking about the housing market crash then and the potential housing market crash of today's market is the idea of a subprime loan. Now, the idea of a subprime loan, I need way more people to sit here, listen, and understand what the hell that is. Basically, in the real estate world, what we called them were ninja loans. No income, no job, no assets. If you had a pulse, you could buy a house. You didn't have to prove your income. And it's insane to me that that was even a thing. Like in the modern Western world, that was a thing only 15 years ago. That is crazy to me. But you were seeing a lot of that back then, and you see that none at all in today's market. In order for you to buy a house, you have to have 2 years of working the same job. You have to have 2 years of W-2s, 2 years of tax returns. You can't just get a job and 6 months later say, hey, I have I've had a job for 6 months, like I want to buy a house. Banks will turn you around unless you have a significant amount of income sitting in your bank that's coming from other entities aside from your job. It is incredibly restrictive to get a house, and rightfully so, because these lending institutions and even these government programs like FHA and they want to make sure that you can actually afford the place you're living in and that you have stability in your job. Piggybacking off of a previous point, I want to talk about the inventory levels. The inventory on the market was anywhere between 3.8 to 4 million homes on the market at any point in time. But when compared to today, you're only seeing between 1 and 1.2 million homes as far as inventory is concerned on the market today. And kind of tying that point together, what exactly does that mean? That means inventory is still significantly low. In comparison to 15 years ago, when inventory is really high, that means the demand won't match the supply that's out there. And if supply can't meet the demand, along with people not being qualified for the homes that they're in, of course, prices are gonna come down. Another aspect of that I have to tie in is the amount of delinquencies that we saw. The amount of mortgage delinquencies back then in the 07-08 housing market crisis was about 10.1%. So that means roughly 10% of every home was in mortgage delinquency. And what does delinquency mean? That means that basically you are months behind on your mortgage. So 10% in comparison to today is only 3.6%. So again, when we're talking about levels, supply and demand, there were more people back then whose homes were in delinquency. Why? Because they were given subprime loans. Why? Because they couldn't afford the house that they were in. Another thing to that is people were getting adjustable rate mortgages. Quite simply, that means after X amount of years, your mortgage will either drop drastically or increase drastically, and you are on the hook for whichever direction it goes. And the last point I want to talk about is the amount of homes that were in foreclosure back then. The amount of homes that were in foreclosure 15 years ago was around 4.6%. Today, it's only 0.6%. So when we're looking at the numbers and we're breaking everything down, we're actually seeing how today's market is so much a normal or average market, especially comparing it to the 2007-2008 market crash. So no, we are not going to see a housing market crash in 2023 or in the near years to come. The biggest reason is because people are not given subprime loans. And another reason is the inventory is just low when you're talking about a historical precedence. All right, so if you found this video helpful, insightful at all, please do me a favor, like it, share the content to anybody who you think is talking about the housing market crash of 2023, and allow them to come on to into my comment sections and yell at me and do all of that in my comment section, right? So share the video, like the video. When you like the video, more people will see this content, and this video is probably one of the most valuable videos I've put out in quite some time. All right, so with that being said, make sure you subscribe. I'll catch y'all on the next one.